All right, we're going to get started. Good afternoon and welcome to our webinar on tariffs, trade, and global uncertainty. We are happy to have you join us today for this important and insightful conversation. We're going to kick off with a little bit of housekeeping. In Microsoft Teams, there is a Q&A feature that we will be using in the meeting this afternoon. It is located at the top, typically, of the screen. There's a little Q&A button, has kind of like a couple bubbles with a question mark. Please feel free to use that throughout the meeting if you have a question that you'd like to ask the panelists today. We won't get to all of them. We do have a fairly large group this afternoon, but we're going to do our best to get through as many as you can. There is also an upvote feature within that in the Q&A. So in the Q&A box, if you see a question that you particularly want to hear an answer or response to, you can click on an upvote little button within that, and it will let us know that that is a question that people are particularly interested in. The University of St. Thomas is inspired by the Catholic intellectual tradition to educate students to be morally responsible leaders who think critically, act wisely, and work skillfully to advance the common good. We have 8 schools and colleges at the university and serve over 10,000 undergraduate and graduate students. We have 3 campuses. Not everybody knows this fact. We have Minneapolis in downtown, St. Paul, and we also have a campus in Rome, which is our 3rd campus. At St. Thomas Executive Education, our mission is to connect individuals and their organizations to the knowledge and skills that they need to succeed in today's ever-changing business world. We offer professional development programs in a variety of topics they're offered to individuals as well as organizations through our custom programs. Through our expert faculty and interactive programs, we are here as a resource for the Twin Cities business community. If you or your organization is interested in learning more, we are happy to connect with you and determine what is the best option to meet your needs. Today, I just wanted to highlight a few of the classes that we do offer. The first one we do have coming up that is directly related to the topic of the webinar today is our geopolitics and business. This class, we're going to dig a little bit deeper into the topic and give you some tools that you can use as you navigate the changing market dynamics. Participants in this webinar can use a discount code. The discount code is webinar10 to get a 10% discount off that program. We also have a new analytics program using Excel and Power BI to help build out dashboards and visualizations. That class is coming up on May 13th. On May 12th, we have our leadership and management program, which focuses on emotional and social intelligence and strategic decision-making. Due to increasing demand, we've opened a new section of AI for professionals. It's geared towards the understanding and fundamentals of AI and how to use and create efficiencies. In addition to these programs, we have our popular certified project management programs, our mini MBA, and our marketing suite of programs. We do offer discounts to St. Thomas alumni, veterans, and groups of 3 or more. So if your organization is looking for training in any of these topics, we're also happy to customize those to meet the needs of what you're looking for. Now, it's time to get into the topic of the day, and I'd like to introduce our panelists. I'm going to start with John Pornor, who has over 35 years of experience in corporate government affairs. He is the CEO and founder of Government Analytica, which is a government and regulatory consultancy. And prior to founding Government Analytica, John was the VP of Government Affairs at 3M. Next, Valentin Povarchik is a senior trade compliance counsel with over 18 years of experience advising multinationals on U.S. trade policy. He is currently the principal at Midwest Trade Law and legal counsel to the Midwest Global Trade Association. And then Lawrence Rezatar, he has served in the Minnesota Trade Office since 2014 and is currently the deputy director. Prior to joining the state office, he was an attorney at Maslin, Edelman, Borman, and Brand. And finally, Susan Marsnick. Susan is a faculty member and the chair of the Department of Ethics and Business Law at the Opus College of Business. She regularly teaches our legal strategy for global business courses. Her areas of expertise and research interests include comparative intellectual property and data privacy laws, and their impact multinationals doing business across borders and today. She is going to be moderating our distinguished panel. And with that, I'm going to hand it over to Susan.
Thank you, Lindsay. It is my great pleasure to moderate this panel with these three esteemed experts. Each will bring a different but interrelated perspective to this topic. This afternoon, we plan to begin by putting the current trade and tariff landscape into the context of the arc of the evolution of the global trading system. Then the panelists will consider the impacts of rising tariffs and uncertainty on Minnesota businesses and offer insights and concrete strategies that businesses can use now to react to and address this uncertainty. Finally, time permitting, the panelists will look ahead to some of the issues in global geopolitical and economics and their implications on business. So to get started, we'll start with Valentine. If you could briefly put where we are now into historical context, that would be useful.
Sure, I will try not to lecture on this for too long, but I could go on for hours because the subject of international trade is very interesting, and I think people started trading with each other as soon as different types of people discovered that they have different goods that they're better at making, and ever since that time, rulers, kings, and rulers have subjected trade to certain restrictions and taxation. So this has been going on for many thousands of years. And we have seen different stages in the evolution of the world trade system. For much of human history, this was a history of contesting markets, competition over resources and over markets. And I think a lot of the world wars that happened in the past are really tied inextricably to trading rights and trading interests. But the arc of history happened to lead us to World War II, and after World War II, the nations of the world realized that this wasn't working so well, and that they also listened to economists who said it would be much better off and everybody would be much more prosperous if we had freer and more rules-based trade. So in 1948, a community of nations formed the GATT, General Agreement on Tariffs and Trade, and that started successive rounds of liberalization of trade, lowering the tariffs and aligning on the principle of the most favored nation tariffs, which says that all, the tariff rates are set at a certain level and no country can be charged a higher level than that. So and then that helped the development of the industries and multinational companies that we know today throughout the 1970s and 80s, and really contributed to a very significant rise in global prosperity over this time. But of course, that prosperity and the benefits of globalization were not equally shared by countries and even within countries by people within societies. And then in 1995, we saw the establishment of the World Trade Organization, which, among other things, in addition to rounds of trade liberalization, led to the creation of a rules-based conflict resolution system in WTO, or dispute settlement body. So through this period of globalization, while there were successive rounds of liberalization of trade, it was not that this area was unregulated by governments. In fact, there was a lot of complex regulation, and that still exists today. So every country has a customs authority that continued to collect a certain import duties. Even in the United States, we had a relatively low level of tariffs, but we still were collecting some revenue from tariffs. We had free trade agreements that made arrangements between nations to have preferential trade or duty-free trade in some cases. We had anti-dumping and countervailing duty laws, which provided domestic industries with some recourse to go to the government when they felt that there would be that trade was unfair, that other countries' manufacturers were dumping their products in the domestic market at artificially low values, or they were getting unfair export-oriented subsidies. So there were, and there still are, laws to address this kind of challenges. We had the WTO dispute settlement body, as I mentioned, which would regulate disputes among nations. We had intellectual property-based trade restrictions, and we had a very complex system of export controls, both on military and dual-use products, as well as multilateral regimes, for example, to prevent the spread of nuclear weapons and biological and chemical weapons, and sanctions regimes that US and some other government enforced. So there already have been complicated sets of rules regulating trade, which have kept lawyers like me busy working with businesses to deal with this regulation. But I think so that's where and kind of set the stage for where we are now. And I think the era of globalization and a rule-based system of trade, I think it started to end, in my opinion, around 2016 was the first administration of President Trump, and subsequently, the President Biden's administration continued a lot of the same policies, including the dismantling of the appellate body of World Trade Organization, which is the dispute settlement body's, appeal organ. So that system of conflict resolution between countries has stopped working, and we've been seeing increasing protectionist policies that may not be fully consistent with WTO commitments of countries, especially in the United States, and also, increasing warfare in technological trade, especially vis-a-vis China.
Thank you. Lawrence or John, do you have anything you want to add to that?
Yeah, I will add to that a couple of thoughts. Generally, I would say the increased reliance on trade and free trade also made countries and companies interdependent on a global trading system. And so while it is good for efficiency, product flow, flow of finished goods, semi-finished goods, and raw materials to be able to source it from wherever is best. But at the same time, countries became more dependent on one another in being able to produce the goods and services that they needed. And this gave rise, in my opinion, to the idea that countries were losing their economic sovereignty. We saw the first manifestations of this loss when UK exited the European Union through Brexit. So it was a shock to the system, to the UK economic system. But it was a key element of that is that the population, the voting population, felt that they were losing economic sovereignty in the process, and they were so interdependent on the other countries that locking mechanism took away from their independence. And of course, use of tariffs, as Valentin mentioned, as an economic tool and an economic lever, it also started creeping into the domain of foreign policy, trying to pick areas of foreign policy and attach it to trade relationships with other countries. But businesses still have to function within this infrastructure. And so diversifying the supply chains now means something different, probably from an economic sovereignty perspective, rather than from just purely an optimization of where your lowest cost goods can be brought about. So I would say the transition I see since 2016 is up until 2016, as a company, you really had to produce your goods and services in the most efficient way possible so you can enter market with a reasonable price and be able to gain market share and consumers. So optimization of cost and your processes was your goal. I think now there's a second criteria added, and that is, where can you produce and source your goods for the lowest cost and highest level of geopolitical certainty? That before was not a parameter that supply chain managers and experts used to use in their work.
Thank you. Lawrence, when we talked earlier, you had talked a little bit about impacts that you are seeing that the trade and tariff uncertainty is having on Minnesota business. Would you like to address that for us?
Yeah, definitely. I think one thing to keep in mind when we're talking about these tariffs, what we're talking about is trade and exports and imports of goods, not necessarily services. And it hasn't really like transitioned into that, though I think it might, and we might see some trends emerging there. For the audience, what we mean in export of services, if you're a law firm, accounting firm, a design company, an educational institution like St. Thomas, you have people that are paying you from other countries for your services, and no product is crossing a border, no customs official is assessing a duty. You hit send or you open the webinar and you are done delivering. And where we're seeing these impacts right now is on tariffs on goods. There's not a really clean way to do tariffs on services, but there might be some impacts. And I also think it's important to quantify or contextualize when we talk about trade, particularly in Minnesota. What we're talking a lot about in goods is intermediate goods. So not necessarily a finished product, but something that comes in, has something done to it, is exported somewhere else. There's more value added, more refinement. Maybe it comes back after that. The example that is often used is in some of the cars that are coming out of Canada. You know, the aluminum in the radiator might cross the border 25 times in different forms. And it's just important to know that all of these tariffs aren't just targeting finished goods. There are intermediate goods in the process, which then adds on costs as you go through. As Susan mentioned, in the trade office, we're seeing some impacts. And the trade office is the international commercial division of the state of Minnesota. So we're here to try to facilitate global trade and global investment. We put together a survey a couple of weeks ago just to get people an idea of where people are on this, what they are encountering, what's working. And some of the responses were very political both ways. That really wasn't our intent. Our intent is to try to figure out what are people doing that are impacted this, where are they seeing the impacts, and how can we learn from the impacts people are facing. And what is clear is that this is not a monolithic impact. Some people are going to benefit from these tariffs. There are companies in Minnesota that manufacture some goods in specific industries that have been impacted by dumped goods or IP issues that are going to see benefits from it. There's a lot of companies in Minnesota that are going to be hurt by it. And what we are seeing on the impacts fall in, I think, a couple different buckets. First is charges and surcharges. The second is inventory. And the third is other spending. So let me talk on charges. Ecolab made an announcement, I think either yesterday or Tuesday, that they are putting on a tariff surcharge on their materials. We are starting to see Minnesota businesses encounter that consistently, and it seems to be landing at about a 6% charge. So whatever your cost of your goods are, you can count on a 6% tariff charge that's going to be added to that. Now, some of that might be for, the customs bond that is paid for on your behalf. It's really tough to figure out what the transparency of those costs is, but we know that they're out there, and we know that they're happening. The second piece is on the inventory, and with the 90-day pause and the broader application of the reciprocal tariffs and the return to 9%, with the exception of China and steel and the other 232 and 331 tariffs, and some of the stuff under IEEPA. What we're seeing is people really trying to buy as much as they can for their supply chain right now, which is a challenge both in cash flow and inventory. So in cash flow, all of a sudden, you're trying to make your purchasing decisions for the next 6 months, the next 90 days. Maybe it's the next year, the next 90 days. You're also going to have to take on inventory and deal with that and warehousing. So that becomes a challenge. Finally, on just general spending and what this means. I'll give an example of a Minnesota company. There's two of them that come to mind. One that was importing yoga mats, which is a pretty basic thing, right? And your yoga mat, when they import it, has a metal buckle that holds the yoga mat as a tube. So the strap goes around, buckle comes in. That buckle is made of steel. So now that company has to trace the country of origin for that steel and then break out the cost of that buckle for the purpose of paying the tariff. So we've got a cost baked in here of additional personnel time that is going to be spent on paperwork and classification. I think the other thing that we're starting to see is companies, when they run into this, and the second example is a company that went through this in 2019, where 45% of the value of their, in 2018, 45% of the value of their product came from one component that came from China. It's the only place that manufactures it. When the tariffs hit there, what they had to move into was cutting all non-essential spending. So they cut their advertising, cut basically everything they could cut. And they quantified it and basically understood that for every 10% of a tariff, it meant in their small manufacturing operation of about 65 people, it meant anywhere from 8 to 10 jobs. So once you reduce costs, you still have to make your margins. Your board wants you to make your margin. They got into workforce challenges and had to start making plans for what they're doing to lay people off, because there is no other place to get that component. So I think those are some of the impacts we're seeing: the surcharges, the paperwork, the inventory, and also looking out for, okay, if these don't get rolled back, or they go back to the level they were now in 87 days. No, 80. This is why I'm not an accountant. 81 days. If those reciprocal tariffs go back into force, what it's going to mean for workforce challenges and where you're going to be able to cut to try to make your targets.
Yeah. I would add to what Lawrence said, build on that. Most businesses take 5 typical actions when they're faced with economic uncertainty, and tariffs, of course, and the negotiation of these tariffs create some economic uncertainty for all of them. One, they have to preserve liquidity, meaning they have to maintain cash on hand to be able to pay for expenses, unexpected expenses to some extent. Headcount costs tend to be one of the highest costs. I was speaking to a client who is making abrasive wheels. The abrasive material is sort of machine-made diamond dust coming from China. The cost of that is about a penny per abrasive wheel. And if the tariffs are 200, 300%, they go from 1 penny to 2 to 3 to 4 pennies. Most of the cost of making their product is labor content here in the US. And therefore, they seem unfazed by the fact that these prices may go up and down. So there are certain folks that fall into that category, and others, as Lawrence mentioned, that fall into the category where the lion's share of one component exclusively is from one country. I would say so freezing hiring, it becomes really a key element, and delaying capital investments, because if you had maxed out your production and you need to increase production for the next 2, 3, 4, 5 years, you make large investments to expand beyond your current needs because you're going to fill that up over the next few years. And those kinds of capital investments and the market forecasts that you have are now on shaky grounds. And so people will not make capital investments. Generally, what people tend to do, what businesses do, is turn inward. One, try to streamline their operations. And today we have a new wrinkle in this streamlining with artificial intelligence as to what areas you can streamline. And two, they have to renegotiate their contracts because their pricing was based on a business model that no longer is effective or in play. And therefore, rather than recalculating a very complex formula for all the elements that are taxed at different rates in your product, you end up getting a flat tax. And to let your customers know that your prices didn't go up on their own, you specify that as a tariff-related surcharge. So I think these are some of the strategies that happen. I saw this during COVID when people had issues with their supply chains. We're seeing that now. And even during the financial crisis and other times when we've had sort of shocks to the system, we see that these common things, preserving liquidity, freezing hiring, delaying capital investment, renegotiating contracts, and streamlining their operations, are the kinds of things businesses do.
Valentine, did you want to add anything to that?
I just, one thing that I wanted to emphasize is the incredible complexity of the new world that we're in. So, for example, this buckle, the metal buckle that Lawrence mentioned, was a great example. I'm familiar from working on these kind of issues that it's actually very, very difficult to trace the very origin of that metal buckle. Sometimes it has gone through 5 different levels of manufacturing, 5 tiers of production, and where did the original aluminum or steel originate? And you can only guess at that sometimes. And producing the mill certificates to prove that can be very difficult or not even possible. So businesses are dealing with incredible increasing complexity of addressing these new challenges.
And just to contextualize this for people who may not deal in tariff issues on a day-to-day basis, at the end of last year, the average real tariff rate for goods in the United States was around 2%, but we had so many where the tariff rate was 0, particularly with our free trade partners. So this adds a substantial level of complexity, as you have said. So looking at this uncertainty and everything you all have said, what role is innovation going to play for helping exporters and importers overcome some of these restrictions?
I can kick the conversation off here. One of the things that I always tell my clients is that, very similar to the fact that biological systems do not evolve unless there's stress on them, I would say political systems, trade systems do not evolve unless there's a stress on them. And now we see a stress on the system. We realized that we had 0 to 2% tariffs from many countries, and it was not reciprocated by the other countries. And the strategy we have chosen is to put a tariff to really create a new balance here. Whatever the political reasons for that is the new order of things for us to live within the trading system. And so businesses have to try to figure out how to navigate and maneuver through that. I think Innovation comes in a part of what spurs innovation sometimes are these levels of stress that allow you to streamline your operation or be able to create a product with a different mix. You may need to now have 3-4 different sources of raw material as backups to one another to integrate things. It took about 30-40 years since WTO in 95 to now, and a few years before that, for our global supply chain to get integrated to be what it is. And so unraveling that and reconstituting that is going to take some time for sure. I would say we don't know exactly what that system is going to look like, and I'm just going to cite a couple of statistics to put context for folks that are listening to the conversation here. Today, the global GDP of all the countries, goods and services that all the countries produce, is about $104 trillion. United States is a quarter of that. So in 25 years from now, 2050, that GDP for the world is anticipated to be $225 trillion. Today, at 104 trillion, we're trying to figure out what the world trading system looks like. 25 years from now, we better have figured out what that is, because you can't trade with $225 trillion given the mechanisms we have in place. Valentin very eloquently mentioned why GATT was required, that WTO was created. When WTO was created, trade in services was non-existent. Lawrence mentioned that today we trade services quite a bit. There is no multilateral body that there's unfair trade you can go to for resolution. At WTO, you need 100% consensus to create new provisions. That makes WTO provisions watered down to basically the lowest common denominator for everybody. So certainly, we're in a new regime when it comes to trade, but there are also structural deficiencies, I believe, in the system that are causing this. But again, I believe stress it spurs innovation. So product design, supply chain redesign, in fact, automation with new tools that are becoming available, these are usually the drivers of innovation and productivity for the American economy.
Yes, please. Go
I
ahead,
was just going to
Lawrence.
jump in on one part of that, and especially the last part of what John said, where he was talking about the innovation. One of the things that we haven't really discussed, it hasn't been discussed in the general views on the tariffs, has been how we're going to handle machinery made overseas that uses parts made by the OEM overseas. There are very proprietary pieces within any kind of machinery. And you might be operating as an American company and look at the tariffs and just feel like, well, this doesn't really apply to me, right? I'm sourcing local, I'm selling local, I think I'm going to be good. I think it would be a worthwhile exercise to look at your machinery and look where the parts come from your machinery. And to John's point about sort of the innovation and what's next, if there are things that you don't think you'll be able to get, or they're going to come at a greater cost for those parts, what can you do maybe to integrate new machinery in? And it might lead to a CapEx. I mean, John's point is well taken, that, you see CapEx as kind of, people try to hold on to their capital as much as possible. But I think as a business owner and executive, you might just want to take a look at that and figure out, all right, is there an innovative solution if this part fails, or to get this process done using a different type of machine?
What I want to add to this discussion is that, of course, innovation will help our businesses to address this complexity and these new challenges. But I think it's important to realize that this demand for innovation to address the challenges really favors well-established, large companies and will probably promote further integration of industries, because to implement some of these solutions, for example, when we worked at 3M, it utilized a sophisticated ERP system that had rules of international trade built into it that really facilitated a large number of transactions every day that were happening. And then 3M started implementing a new ERP system at the SAP, started switching to that. And there was a team of professionals, trade compliance professionals and IT professionals, working for several years to redesign that system to improve the rules that govern transfers of items, the logic that was built into it. And of course, there's room for blockchain technologies to help companies track, ensure the integrity of their supply chains. There's room for artificial intelligence to help companies identify transactions that are open to higher risks than others. There's room for all of that, but I think it's going to be difficult, especially for medium-sized companies. Larger companies, I think, will have an advantage in addressing all of these challenges.
Well, and sorry, John, go.
Yeah, one of the things I want to add is, there are certain things I think many companies can do now. Of course, in a small company, every person is doing 2 or 3 different jobs, plays different roles. For them, cash flow is far more important than a large company that may have a larger cushion of cash associated with them. I think Abigail or Carly will put a link in the chat for those who are interested, where I have tried to summarize some of these themes or topics. You can click on that link, and there's a page on trade with some of this analysis in it. But one of the things I think most companies now need to think about, if you're a small company, you may have to hire expertise to be able to do that, and you release that expertise when you no longer need it. If you're a large company, your specialization is high. There's probably staff in your company that already are focusing on those things. But you want to minimize your exposure to trade risks of all kind in general. And I think scenario-based analysis and mitigation strategies are the kinds of things a business needs to do. So scenario planning becomes really important rather than just being reactive to the last event and running around trying to figure out what the response may need to be. This brings about a topic of interest to me, especially since my business focuses on government and analytics. Trade analytics, I think, becomes really important. I think we are in an era where we would be able to actually implement those things and build more resilience and maybe reveal strategic options for a business to be able to do that. And I think businesses need to ask themselves, given the volatility of where we are now, how can I grow more intelligently, more reliably? And I think if you're a small, medium-sized business or a large business, the answer may be different things to you depending on the level of resources and staffing you have, but you can always bolt on expertise for the duration of time that you need it, and then release it back through engaging with folks that can provide you advice in this area.
Super. You answered the question that I had teed up next, was what's the advice that you would give to a small or medium-sized enterprise, and maybe to build on that, what kinds of resources are available that you can think of to help small and medium-sized enterprises?
Yeah, so from a trade perspective, many of my clients that are coming to me are really asking for tactical operational answers to the top issues that they have. And so I think understanding the general framework of trade and why things are moving in the direction they are is important. But at the end of the day, they need to make the widget they're making, they need to provide the service they're providing, and they need to be able to continue to pay their staff be able to procure what they need. So I think they need a certain level of expertise and engagement that may not be present in their organizations because they're used to the 0 to 2% tariff regime where everything was widely available and they could access it with very little barrier in their way. That movement away to a more structured framework on how to look at these types of issues, I think is really important. While we hear a lot of percentages in the conversation we have about tariff, one of the biggest things that I think is missing are exemptions, and I want to bring that up. Almost every regulation passed in this country or in other countries comes also with a list of exemptions, trying to carve out or minimize impact to vulnerable industries. And I think if you once you have gone through the percentage table for tariffs, I encourage you to actually go deeper into the exemption annexes that are there. And in fact, in the link that the staff here will share with you, I have put one of those exemption lists in there for chemicals and related materials. And you can see how many materials are exempted from tariffs because our reliance on supply chains that are elsewhere are so big. By just cutting them off, you're basically stopping the businesses from operating effectively. So I think you need someone to hold your hand in managing and maneuvering through this. If you need representation, you need somebody with a legal background to be able to do that for you. And from a tactical and operational perspective, there are organizations that can offer you insights on how to do that, especially strategies for the 5 elements I talked about that are really important to any businesses in these times of uncertainty.
And I want to briefly continue this theme of how can innovation help companies address these challenges. And I do want to speak a little bit about legal innovation. And as John mentioned, some of the strategies for mitigating impact of tariffs have not been widely used earlier just because the level of tariffs our country has been charging has been relatively low, although some large companies have resorted to these strategies for a long time already. But there are some things that companies can do. So one of the strategies is tariff engineering, finding, okay, if country A has a 25% duty rate and country B has a 10% duty rate, can we redesign our supply chain so that we switch more production to country B? There are also different ways of characterizing goods, and there may be legitimate ways to reclassify your goods in a more correct classification that's subject to a better duty rate. Then another strategy that companies pursue is first sale valuation. Typically, when an import comes in, the price that you pay the duty on is the import value of that merchandise, but our regulations and laws also allow it to be valued at the value of an intermediate sale, not the final sale to the United States, but the first sale, let's say, or a later sale between the manufacturer and another intermediary, which is going to be a lower value. And then drawback is another strategy that companies which import foreign products for processing in the United States and perform substantial transformation in those products can, if they can trace, the values of the imported goods and the improvements that they made, they can get a certain amount of duties refunded that they paid for items processed in the U.S. And then there are free trade zones where processing can take place outside of the U.S. customs zone for the purposes of exporting that good. So I already see companies thinking more about these strategies, and I expect the need for reliance on these strategies for looking through, analyzing your supply chains, understanding your import flows, and figuring out where you can save some money. I think companies are going to be paying more and more attention to this. And this is an area where um, we legal counsel, we can help, but it's also an area where uh, a lot of supply chain trade compliance professionals are very helpful, and we collaborate closely in this kind of areas. And then there are other things that have shown already to be effective with this administration, and that is banding together for industries, industry associations, coming together and advocating before the government, before the decision makers. This duty is going to kill our business. It doesn't make sense to us. Can we have some kind of exemption here? So I expect that there will be more of this kind of advocacy as well. But I think it's most effective when it's done through associations of industry rather than by single companies.
I want to build on that, but there was a clarifying question that had come through. So I just want to throw this out, and it's something kind of basic, which is, the person said, did I hear that tariffs are only applied on end products and not raw materials?
No,
That's not quite correct.
Yeah.
no. I think I was the one who said that. What I just wanted to make sure is people understood in the general conversation that when we talk about tariffs, we're talking about a lot of intermediate goods and not just end products. So it is the intermediate goods that are being assessed. If I could pick up on Valentine's comment, I do think that the foreign trade zones as a potential solution can work for companies. It's essentially, like he said, it's basically a legal fiction that says this product that's entering the United States, even though it physically has entered the United States, as long as it's in the foreign trade zone, has not entered the United States stream of commerce, and the duties can either be deferred until a later date, or if you're adding value and re-exporting, you don't have to pay anything. It's like it never came in the country. Those are they're not free. They come with paperwork and costs, but they can be a potential solution. And both John and Valentin mentioned the classification of the goods, and we saw this in the first Trump administration. The I don't know that prior to 2018. Where you classified things in the harmonized tariff schedule of the United States got a lot of attention. It was probably like, what is the easiest place to put it? And let's just get this done with. It is a critically important step that you can take because it might change the classification of some of the components within your good. And you can find yourself in a much better tariff situation by paying attention to that and working through it thoughtfully than just saying, I don't know, it's under this heading and this chapter and this subchapter, and let's just throw it in a catch-all. We'll call it other under one of the categories in the harmonized tariff schedule. Really pay attention to it. It can really work for your benefit. And a final example is, and this also relates to paperwork, entities and products that were subject and have been properly classified under the U.S. Mexico-Canada agreement have been exempted from the tariffs with Canada and Mexico. It is a process, unless they're in the 232 category. It is a process to go through, but really can work to your benefit on how to do this. And I think the numbers I heard, it was like only 30% of the products coming out of Mexico and maybe 50% of the products coming out of Canada had been certified under USMCA at the beginning of this. I'm sure those numbers have gone up, but it is a way to try to minimize your exposure even to changes within the system.
Yeah, I want to add two more things to what Lauren said. One is that we do have free trade zones in Minnesota, in case you did not know. And Lawrence's organization manages and oversees. They're regulated by state law, by statute. And so this is an option for people to explore. It may not have been something you knew about, but now it may be one of those options you want to put into the system. From a practical perspective, I think everybody needs to do a product review. That means cross-referencing your imports against the listed harmonized tariff schedule, especially the new annexes that have come out. And as I mentioned, I put one of the annexes as an example in the link that Carly put in the Q&A stream. You have to make sure your documentation aligns with the schedule and the new language for the listed exemptions. If you're trying to seek an exemption, being very clearly aligned is really important without ambiguity. If a classification is not clear, you have to consult a specialist or legal advisor for proper interpretation. You need to monitor these kinds of annexes because we're in a new trade regime. Daily, weekly, new exemption lists are coming out. And so you really need to pay attention to what these are and make sure you cross-reference them against what you have. And much of this content, the final word, isn't what is on general government websites. It's where Customs and Border Protection folks put on their website. And so the last word on what exactly at the execution level, the policy that was announced is translated to is what CBP basically puts on their website. I want to just emphasize how important it is, as Valentin mentioned, to make sure you inform people about the impact of this on your business, your stakeholders, your shareholders, your representatives, etc. And also, when it comes to a policy engagement, when large numbers of companies band together and create a more unified voice, they amplify their voice to be able to talk about these issues and the impact of these issues in their business continuity and their operations. So I think being part of organizations or associations or having links with folks that make this topic their daily business is really where you want to be, because you can't be an expert in all of this. You want to bring talented people in the mix to work with you, be part of your team when you need them, tap onto them to be able to help you out.
Thank you, John. I am going to throw it back to Lindsay now. We're gathering some of the questions that you've put into the Q&A. So back to Lindsay.
Awesome. And I'll actually jump in really quickly here. Thanks for being with us today, everyone. My name is Abby Welly. I am the program manager for open enrollment programs here at Executive Education. Before we jump into the Q&A, I wanted to just mention again that we do have a course, that we have scheduled kind of in response to the interest in this. It is in June. Will be taking place on June 17th from 8 a.m. to 4 p.m. It's an in-person program. The title is Geopolitics and Business, Navigating Global Risks and Opportunities. The idea is to go more in depth into the discussion today, explore the impacts of geopolitics on business strategy, looking at financing, logistics, supply chain management, gain more insight into these geopolitical shifts and ultimately equipping businesses with the tools and strategies that they need to navigate these risks and seize global opportunities. The course itself will be led by John Pornor, who is here with us today, so he will be the professor. If you're interested in the course, there's a QR code on the screen that you can scan. It'll take you to all of our upcoming programs, so you will find the Geopolitics and Business course there, and you can just register online. Now we will jump into the Q&A section of the webinar today. Just a few logistics of the Q&A. You'll see that there is a kind of a Q&A toggle at the top of your screen on your Teams that you should be able to click into, and you can submit questions there. We are going to do our best to answer all of the questions today. We might not get to all of them. So if there is a specific question that you are interested in, you can upvote other people's questions that have been submitted. So that is just the little arrow on those questions that are faced up. You can also like them and comment them, but if you want to upvote it to get it more visibility, you can do that with the arrow facing up. So with that, Susan, I will hand it back over to you.
Thank you. A lot of questions, and some of these actually are relating to questions that have been asked, but I will put this one out. It blends together two things that were asked about. Have you seen any successful examples of carve-outs or exemptions being gained? And if so, what were the routes to these outcomes that became successful?
Yeah, so let me try to answer that, because part of my role in my previous life was to in fact navigate these kinds of things. Generally, associations are the best place to try to declare your intent, because likely what is affecting you in a business is also affecting businesses that are similar to you. And therefore, if you can pool your resources, have a unified voice, you'll be able to engage. Generally, engagements happen at I would say 3 different levels. You have to engage with the executive branch, of course, on the issue of tariffs. It's a federal government. That's where you focus on. And the executive branch and the Office of the President really is responsible for trade policy by design. Certainly, members of Congress are folks that they need to know what the impact of these things are going to be on you, because at the federal level, the executive and the legislative branch work together to create the kind of outcomes that they want. And aside from executive branch, legislative branch, I think peer groups or pressure groups also are really important. And associations are one of those types of pressure groups. Certainly, other organizations that can demonstrate the positive or negative impact of something are folks you want to connect with. So it is really amongst those 3 levers. Some people are in favor of your proposal, some people are neutral, some people are against. What you want to do is amplify the voice of those who are in favor. If people are sitting on the fence on an issue that are neutral, you need to educate them to move them into the in favor column. And that's sort of how you create consensus around an issue. So it's really a fairly well-structured, I think, engagement process. A business, a small and medium-sized business, is quite often not equipped to do all of these things. But I think once you join an association, you use the power and resources and the voice and the structure and organization of an association to be able to do that effectively.
This next one has to do, I'm going to contextualize it out a little bit more broadly. Beyond just the question. The question is, if we pass along trade-related increases to our customers, this sounds like a B2B, as a separate line item on the invoice, what other kinds of concerns do we have to have with, is that going to be taxed? How is it going to be taxed? And related to that, I mean, during COVID, we saw substantial restructuring of, how do you put together your force majeure clause? How do you negotiate your contract? Can you talk a little bit more broadly to those kinds of issues as well?
I'll start trying to address this. I mean, if the question is whether your trade-related increase is going to be subject to other taxes, I'm not actually a tax specialist. I always specialize in international trade, but I would say yes. I mean, if your price is going to increase and there is a sales tax on the final price, you're going to owe that sales tax, or the customer is going to pay for it ultimately. But yes, I think there will be other taxes. But managing this complexity, yes, looking at, I'm already working with a client that is looking at all of their supplier agreements with all of their suppliers and business partners, and looking who is importing what and trying to determine who is responsible for paying those increased duties. The party that's responsible for paying the duty is the importer of record, and that's usually a US based party, though it can be sometimes a foreign based party that nominated an agent to import on their behalf. So whoever is responsible for filing that import entry and bringing the product in is going to owe that tax. And that can be regulated by special provisions in the contract. It can also be indicated by Incoterms associated with those transactions. So, under one certain Incoterm, the exporter, the producer of the goods, the seller pays the import duties, but then under most Incoterms, actually the buyer is responsible for paying the import duty.
Question, this one has a couple of people asking it. They would like to have a little more detail about the free trade zones in Minnesota.
Yeah, I can jump in on that one. Just so we know, and using the right terminology that we use in the United States, here we call it a foreign trade zone. So in the rest of the world, they use free trade zones. Here we'll use foreign trade zones. Yeah, there's actually there's a few in the state. On April 22nd, there is a webinar, and I can get the information to Susan and the crew at St. Thomas to get out to everybody on how the FTZs, it's government, we have to try to use as many acronyms as possible. So instead of saying foreign trade zone, we just say FTZ. How the FTZs operate, how you can take advantage of it. It is sometimes it's a bonded warehouse. Sometimes it can be a corner of a facility, a corner of a room in a facility, in your facility. It doesn't have to be an actual, designated specific place, but I'm going to rephrase that. It has to be a designated specific place. It is not like you cross a line where you go, well, now I'm in the foreign trade zone and now I'm outside of it. On the map, it might be that way in your warehouse. So I can get the information on that to you all. It really is it's a duty deferral and kind of a cash flow solution. And it really can make a difference. Especially if you're looking at bringing in a lot of inventory very quickly over the next 6 months, and you are going to add value to it and ship it back out, or you want to try to play the different duty game on what you want to do and when you want to pay it. So yeah, those are the foreign trade zones.
What I would add is, for foreign trade zones, as a compliance lawyer, I want to add that what is really essential for operators of foreign trade zones is to have really good accounting systems for the inventory that comes in, the manufacturing processes that take place in the zone, and what goes out, and really be able to match the exports, imports, and to be able to account and document all of those transactions, because they may well be audited. And if you cannot produce an account for all of your transactions, then the company can be charged duties for the amounts that they cannot account for. So it's really important to establish really good tracing and accounting system.
Yeah, I just echo that. The compliance part of it is critically important. You don't want to run afoul of Customs and Border Patrol in your administration of your product within your FTZ. Yeah, it's a really bad day, I think, if you are found to be non-compliant.
And I'm sorry, I somehow have lost my photo, and I hope that, or my, can you all still hear me?
Yes.
All right, so I'll be just talking from behind the photo. Sorry about that, it just vanished. Question, next one. How might the latest tariffs impact companies like Target or other large corporations that have offshore technology that support subsidiaries such as software development, customer support centers, etc.?
John, do you want to start addressing this?
I'm looking at my experience in many of those areas. Let me give you an example of what I was faced with when I was working on medical devices during COVID, and the fact that many countries had put export controls on them because they wanted to keep everything inside their borders and not allow it to move to other countries. Remember, sources of production may be in some other country. When there's an existential crisis around the world, people want to sort of keep their citizens safe first. And so during that era, I think what I found out was that these supply chains really didn't have the elasticity we felt they needed to be able to respond to these types of effects. What does that mean? Large companies still have to operate. They still have to source what they need from these locations. I would go back to the provisions and annexes that are being issued, because our tariff rules are as we speak are being recreated and reconstituted in a new form. And so what you need are trade experts to advise you as to whether if you had software development, let's say in another country, for the kinds of things you're doing in the US, or you had a legal team in another country that was providing you services here in the US, how is that service, for instance, being taxed? When it comes to products and manufactured goods, of course, components and the kind of added value of manufacturing is some of those things that you have to come up with. But one of the contentious issues in today's trade discussion is a digital tax. So if your services are being digitally offered to you, many countries are trying to figure out how to tax that, because if it's coming from outside their borders, that may suppress those industries inside their borders. So they're trying to figure out how they can protect their industries, and that type of digital tax is something that I think we're just beginning to talk about. It was a big area of contention between US and European Union recently, because EU passed such a digital tax. But I think that bilateral trade discussion that is going to be ensuing in the next few weeks, a big element of it would be this.
Great. There are several questions that are related to exemptions, and I guess I'll try to band these together a little bit. You had talked about how the Customs and Border Protection, CPB, is a good place to go to get sort of current information. People are asking about where are good resources to learn whether the USMCA are being followed so that they can have that exemption. Where can you go to find out about other kinds of exemptions that might relate to your industry? Is there an easier way to do that?
Well, let me talk a little bit about this. Um, Certainly, you can go to the website of Customs and Border Protection and find a lot of information there if you browse around. Generally, our government websites have a lot of transparencies and a lot of good information. However, a lot of this information can be confusing and subject to interpretation. And so there is an industry of professionals working to advise companies on these kind of issues. Uh, for the purposes of customs and import, uh, their customs brokers, licensed customs brokers who are licensed to advise companies on proper classifications and valuation of goods and answer a lot of those questions. We lawyers also work closely with trade compliance professionals. So, for example, when there are issues of interpretation of classification and World Customs Organization explanatory notes, how do they apply to this product or this? It can be subjective. And so we can help with legal opinions. A lot of the rules surrounding classification and valuation and country of origin, there are big volumes that could fill many uh, rooms in the library written about all of these rules. And so it can get complicated. Um, so I always try to advise companies, even not big companies, even medium and small sized companies, to uh, as much as possible develop their internal capacity and internal expertise to deal with this complexity. And that doesn't always happen overnight, but it's good to have an internal expert. Big companies have teams of them. uh, 3M had a team of about 50 trade compliance professionals and 2 lawyers advising on these kinds of things. But even if you're not 3M, you can have 1 or 2 people developing expertise. Maybe it's your logistics manager who is also a customs broker. And we, professionals who are not in your company, we can be there to support you, educate and train those professionals, and support you on the more kind of complicated issues.
I think one important local resource is the Midwest Global Trade Association, the MGTA, that Valentin is a part of. And I think all of us have probably been there and attended things. It is a really impressive resource. And for the small and medium-sized businesses that are here, to pick up on what Valentin was just talking about, we have a lot of multinational corporations here that send a lot of goods into very remote corners of the world. The great thing that we have in Minnesota is sort of a general atmosphere of cooperation in these sorts of issues and resources that exist. And so going to MGTA, you're probably going to find some pretty solid people that can help you identify solutions at a reasonable time.
No question.
Thanks. Allergies. They can help you identify a reasonable answer an answer at a reasonable cost and pretty fast amount of time.
I want to share one additional thought. I've been waiting for a question to respond to with this thought, but actually it links to one of the topics we discussed before. How can we manage all of this? What can companies do? And I think while we are right now in a very difficult, challenging time, I think we should not resign ourselves to everlasting chaos. So what I mean by that is that right now things are happening at the speed of light. The president changes his mind about tariffs on hourly basis, but that's not the way to conduct policy. And while I think we need to realize, yes, it is going to be more complicated, more complexity. and we need to deal with that, but it doesn't have to be so chaotic. And one of the ways in which businesses and now states, the state of California yesterday filed a lawsuit challenging the president's authority to impose a lot of these new tariffs. And it's very far from clear that President Trump has the authority constitutionally and legally to change our domestic trade system in such a radical way. So we will see what the courts have to say. But to one of the important strategies, I think, to deal with very radical changes and very drastic changes that may not align with our principles of rule of law is to double down and insist on following the principles of the rule of law. So the courts will have their say on the president's authority in this area. And I think we, as a community of business people and professionals and just citizens of our country, should advocate for and insist on respect for the rule of law, following the commitments that our government has, both under our constitution, the laws that exist for the nation, and international agreements. And yes, that system, the rule-based order that existed, needs to change, but it doesn't necessarily need to be completely exploded. Hopefully, we, as a society and as a global community, we can find ways to change the rules of the game in a more structured, more rules-based way. And as a lawyer, I really believe in doing that. I used to think of myself as a trade lawyer. I used to think of myself for years as kind of being a soldier in trade wars. But the alternative, and there's an industry of us soldiers who've been focusing on these complicated rules and regulations of trade. But I think it's better than the alternative of having actual hot wars. And that's been the history of civilization for most of our history, is that nations have fought over market access and access to resources. And we should not resign ourselves to going back to that. And really, I think we should do our best to preserve a rules-based world order and a constitutionally legally based system of governance in our country.
Thank you so much for that, Valentine. Have time for just a couple of more questions. Oh, and one's kind of a straightforward basic question on rules of origin. And the question is, do country rule of origins apply to Chinese tariffs? Meaning, if goods are made in China but shipped to the United States from a different company, does the China tariff still apply?
So they would be shipped from a different country.
Right. So maybe shipped to Vietnam and from Vietnam to the United States.
Yes, and we have seen some Chinese companies pursuing this as a strategy, diverting their products through another country. Legally speaking, there are different sets of rules of origin, but usually the one that applies in the United States is called substantial transformation. And that's where the components that were put into this final product were substantially transformed and were made into something new, a new article. And that doesn't change by transshipping a product through a different country. So legally speaking, the country of origin does not change. However, there've been attempts to pretend that the country of origin changes by transshipping the product. And then, of course, depends on the level of transformation. Because, for example, if it was something was done in China and then a product was sent to Vietnam and some further substantial processing was done there, a substantial transformation, then that can confer origin of Vietnam.
Susan, I want to add something here. This is not about the US. I'm going to talk about a European Union issue, but it's endemic to the discussion that we're having here. Recently, a European Union passed a directive that requires now, when paper products enter Europe, that they be identified as having been made from sustainable forests.
Hmm.
And so if you're selling any kind of product and you have a paper manual in there, you have to now prove that that element of it came from a sustainable forest. Yet, the pulp and paper industry doesn't really track its paper production to such a level of detail so they would know what the composition of the sheets of paper that your manual was printed on was. So I'm identifying this. This becomes a barrier to trade when you have onerous regulations that are not easily implementable. There are rules of or countries of origin and how to determine composition of products and where the materials came from is a very thorny issue that I don't think anybody has really completely figured out. And therefore, the laws never are black and white, and they have elements like substantial transformation or other components to try to get around the fact that this is not that clarity is not there for how things commingle to eventually land in your hands or in your company as an intermediate good that you're going to incorporate in your final product. But I think the world is going in the direction of having more clarity about all these minute elements of where the supply chains come from. So what companies tend to do, they need to push that responsibility back to their suppliers. Those suppliers will likely push that back to their suppliers. That wave is going to take some time, but in the direction that we're going, I think that's one of the things that companies, our companies that are participating in this call, need to be ready for.
Yeah,
Well,
if I just jump in, Susan, I think those are two perfect answers. And the transshipment issue you'll hear sometimes called like is it a two-port strategy? It's like it leaves one port, goes to a second port, goes from that second port back to the destination. And it is an area that CBP really cares about and pays attention to. The other thing that John mentioned was a non-tariff trade barrier, right? This idea of the instruction manual being printed on paper from sustainable forests. And even in the world that even if the tariffs go away, I do think companies need to be aware of the non-tariff trade barriers and also in services. John mentioned the digital services taxation discussion. Just in this trade war with Canada, we've seen Quebec put a 25% surcharge on any municipal contracts coming out of Canada that are going to American vendors. So if there is a consulting contract, a services contract coming out of Quebec, the Quebec government wants the entity to recover 25% of whatever that payment is going to be as a surcharge. We might see this more in Manitoba has a number of projects for their hydro facility, which is owned by the government of Manitoba. I mean, it's a staggering sum that they are expecting to pay over the next 7 years to modernize the delivery of hydroelectricity from their hydro dams into the United States, and is considering putting a prohibition on U.S. contractors or U.S. subs bidding on that as well. So these non-tariff trade barriers are starting to seep into services as well. And it's an area to pay a lot of attention to as you're a business.
Yes. And sadly, with that, we're going to have to wrap this up. But thank you for bringing up the non-tariff barriers as well. Thank you to our three experts. And now I'm going to throw it back to the organizers.
Thank you, Susan. Can you hear me okay?
Yes.
Yep. Sorry, I'm having, just like you, Susan, I had issues with my camera. But thank you all, and thank the panelists. A special thank you to you and the participants who joined us today. We appreciate it. You will receive a recording following probably early next week at the latest. And with that, we look forward to seeing you in a program with us soon. Thank you.
That's great. Thank you.
Thanks all. Take care.
Goodbye.